this morning. Sarah Eisen, Alex Steele in for Scarlet Fu. And our guest host, we are thrilled to bring you a perfect day with Hewlett and Dell. He's a former chief executive officer of Medtronic, now at HBS. Bill George joins us. Wonderful to have you here this morning. Where to begin?
We have to begin in Europe. You said the euro's getting crushed and stocks are falling right along with it. We got some ugly numbers out of Europe this morning. Manufacturing and services across the region showed it's worse than economists were forecasting. No question about it. Here in the U.S., the economic data to watch will be the 8:30 report on consumer prices and, of course, jobless claims, as always, on Thursday. 10 a.m., we get existing home sales, leading indicators. A big rise yesterday in single-family homes, highest level in 4 years.
Let's do a data check. We go cross-asset. Alex Steele jump in. Sarah jump in as well. We look at equities, bonds, currencies, commodities. Futures were -4. They're now -5. They've worsened in the last 30 minutes. 10-year yield is a 6 basis point move.
Yeah, we're certainly seeing,
over the last 2
whether
days.
it's a correction or some sort of sell-off, a lot of it's driven by the Fed, which we'll talk about.
Oil. Alex, help us
And you have to look, as we see worldwide market sell-off here, you have to look at the commodity space. It started yesterday with copper at around 10 a.m. There was a huge block selling, and that continued into oil, continued into gold, continued into silver. Rumors about hedge funds liquidating, perhaps Saudi Arabia increasing production, all contributing here.
Yeah, and you see it with the currency, Sarah. There's just no other way to put it. Sterling is just getting crushed like the yen a few days ago.
Absolutely. I was talking to Sebastian Galli of StockChat about this yesterday, and he says there are a lot of hedge funds in this trade as well, not as much as the Japanese yen, but it has further room to run. He said we could test 2010 lows on sterling, 150 region.
Go through 150.
But it fits into the overall picture right now. Yesterday, stocks had their worst drop since back in November here in the U.S. And I also want to mention a few earnings reports. 7 a.m. we get Walmart, and then after the bell today, the biggie will be Hewlett-Packard. We'll see how Meg Whitman is doing on her turnaround efforts. Hopefully no drama this time for her. Autonomy,
you really believe it?
Write down.
We'll
talk to them.
Well, there'll be drama. We need to get a briefing on that from our guest host this morning, Bill George, through the hour with Harvard Business School. And with Walmart coming out, we're thrilled to bring in, what a great tandem, Bill George and David Strasser writing brilliant notes for Janney Montgomery Scott on Walmart. To both of you, good morning. David, I look at Walmart and I look at this idea of just less money in our paychecks. Is it valid?
It's going to be very valid. I mean, I think, you know, the memo, the now infamous memo from last week, I think is indicative of not only payroll taxes going up on everybody, but gas prices have been up, what, 35 days in a row or something like that. They've been complaining about the paycheck cycle going back all through last year, and it had to get a lot worse in January.
Bill, when you look at this, a management can't panic. How does Walmart not panic over a difficult February?
Well, Walmart's never panicked over the short term, Tom. They just keep going. They're like the tide coming in, and they're showing nice, steady 10% earnings. I think you'll just see them keep coming. They have the best logistic machine in the world, and they're very powerful, and I think they'll just keep going. Yes, they'll be affected by short-term factors, whether it's high gas costs or whether it's high payroll tax, but they'll keep going.
Well, speaking of powerful, really topping the front pages this morning, the Federal Reserve. This is the debate of the moment. The speculation is certainly heating up that the Fed might take away the punch bowl sometime soon, or at least there's growing talk now, we know, inside the Fed, that there are risks to the current open-ended quantitative easing policy. And here's the money quote from the minutes that were released yesterday. Some members emphasized that the committee should be prepared to vary the pace of asset purchases, either in response to changes in the economic outlook or as its evaluation of the efficacy, the Fed, using my language.
That's Sarah's word from 2012.
Purchases evolved. I think they took it from me.
Do you let, at Harvard Business School, are you allowed to use the word efficacy?
You bet.
It's very valid here for the Fed.
Absolutely. I think that's the test.
Absolutely. So
you keep pumping money in, but is it really going to have an impact?
Stocks sold off. Oil and gold, as Alex said, got crushed on this idea that maybe the Fed can't stay in the game forever. Even there's talk of risk inside the Fed.
So as the Fed kind of withdraws, though, you have to again shine the light on Washington. A new Bloomberg poll out rating the president as he enters the latest budget showdown with Congress. 55% of Americans approve of Obama's performance in office. That's the highest job approval rating in 3 years. Republicans, though, record low of 35%. Of course, Congress, though, on vacation, so who knows if they saw that poll. And we're 8 days left before automatic federal budget cuts begin. And when Congress returns from a recess next week, Senate Democrats are planning a vote, of course, to impose a 30% minimum tax rate on the highest earners.
One of the shifts here is the sequester is about spending, and yet the headlines, Bill George, are about a further tax increase. Can we do this just with spending, or do we need to talk about further tax increases?
Well, no one's stepping up to the spending. That's the problem. Neither Republicans or the Democrats are saying let's cut specifics, particularly, and the president is not. And we can't do it all on monetary policy, Tom. We've got to get on top of fiscal policy, but I'm not optimistic anything's going to happen in the short term. I think we could see a stalemate, and then they'll probably get their act together a week later.
I think I saw a tweet last night, I don't know the source, that's discussing the first move is 100,000 people in the military, like March 1.
Furloughs, we know that this is going to affect. Half of these automatic spending cuts that come on March 1st without Congress doing anything, 85 billion of them, half of them go to the Pentagon. Well, while we have Bill George here, another big story that everybody's talking about and asking and wondering and debating, Jamie Dimon's role. He's chairman and CEO of J.P. Morgan, and now a public employee labor union and many other large pension funds are pressuring the bank to separate those two jobs for him. They want the bank to put it to a vote at the shareholder meeting in May. This, of course, has been heightened after that $6.2 billion trading loss, the London whale. We should note that this is kind of common for a CEO to have a chairman role in the U.S. 281 companies out of the S&P 500 do it, but now the scrutiny is on Jamie.
Well, let's get the dialogue going here. Paula Dwyer writing for Bloomberg View this morning. This, of course, on Mr. Dimon, who I guess is a lightning rod on this. The chairman-CEO combo is popular in the United States. A council of institutional investors calls the role, quote, a fundamental conflict of interest. In the past decade, the idea of an independent lead director has become popular. We have the perfect person this morning to address this. Bill George, Medtronic, where were you on this?
Well, we had an independent lead director. All the boards I'm on have one. I don't see much difference. I think it's just a question of titles. And back to Jamie, I think he's done a very good job. He took his hit. He took a 50% pay cut. I think just beating up on him is not going to help. By the way, J.P. Morgan delivered a 16% earnings growth, even with the $6 billion loss. But I don't think there's any benefit to J.P. Morgan for splitting the roles.
In a board of director room with a big fancy table and big fancy staffs and all that, what does the lead director do? Do they sit next to Mr. Dimon?
The lead director ensures the balance. They have to go over the agenda. They make sure that all the board members' views are heard, but that's the chairman's job as well. But I think this provides a balance. You need to have one or the other. And I think the lead director role can work very, very well with somebody who can make sure that there is a balance between the independent board members and the management. And I think that's exactly what they do, and I've seen it work extremely well.
We've got a lot to talk about this morning in the company world. Walmart, Hewlett-Packard, and Dell, just to mention a few. Let's get to company news. Here's Alex Steele in for Scarlet Fu.
And Tom, today we're going to kick it off with Apple. There's a hiring freeze at Foxconn, putting a chill in Apple shares. Apple's stock tumbled on word Foxconn and stopped recruiting new workers until the end of March. Now, Foxconn says it's because more workers than it expected returned after the Lunar New Year break. But, of course, Apple investors nervous the hiring freeze may reflect a slowing iPhone 5 sales. And Boeing is ready to propose possible fixes for the batteries on its 787 Dreamliner. The plan includes a harder battery case and a venting mechanism for fumes. That's according to people with knowledge of the matter. Boeing will present the plan tomorrow with officials at the FAA. And Sony introducing PlayStation 4. It's the first video game console from Sony in 7 years and comes as more games are being played on mobile devices. PlayStation 4 will go on sale in time for the year-end holiday season. No prices were announced. Tom Keene, you were going to be first in line to buy this.
I could care less. I was thunderstruck by Twitter. It was all over Twitter. This was covered like a presidential press conference, and they were angry.
There's some die-hard video gamers out there.
Although you have Michael Patcher of Wedbush saying game-wise it was an absolute home run.
Okay.
We'll see if it's enough to help Sony.
Productivity down in PlayStation, maybe productivity down in France as well.
Yeah.
This was jaw-dropping.
Yeah, did you hear about this?
Yes.
This is in the Wall Street Journal. The American Tire Company executive who blasted French workers. It's Titan's CEO, Maurice Taylor. He decided not to buy a tire factory that Goodyear is planning to close in France, and here's why.
There's the quote, Bill George.
The French workforce gets paid high wages, but work only 3 hours. They get 1 hour for lunch, talk for 3, and work for 3.
Sounds like surveillance.
I told the French union workers to their faces, they told me, that is the French way.
Bill, this is, we make fun of it and we say good morning to everyone watching in Paris and across France today. But, Bill, this is a serious issue about productivity. Americans, we work like fools, don't we?
We have to compete with the rest of the world. It's not France, I can tell you. France has, the government makes sure that the prices for local companies get very high prices and high margins. But, yeah, I think the work rate's a huge amount. There's probably a 25% delta between a French work and American work.
But it's hours
and even
work.
Higher
The French are just as productive. They just don't work as much.
Well, I would question that. Maybe in making cheese.
Well, certainly French unemployment has skyrocketed along with a number of nations.
Well, but I think they could have a lot more unemployment if they go to a free market. I think it's a very serious problem.
You're only working a 3-hour work day.
Yeah, right. 3-hour work day.
Tom, compare them to Germany. I think you'll find much higher productivity in Germany.
Well, that's the gap in the euro. We could get into that. All right, but instead, coming up, number for you, 11%. That's how much store traffic was down in the first week of February compared to an 8% gain for the month of January. Walmart, the world's biggest retailer, in focus. Next on Bloomberg Surveillance.
Just a toy, a moneymaker as well. Markets on the move this morning. We can look at equities, bonds, currencies, commodities with Alex Steele here in for Scarlet Fu. Let's go right to commodities. Is the commodity boom over? Rio Tinto, CEO out. BHP, a little more elegant, CEO out. There's this
Anglo-American, Kinross Gold, Barrick Gold, you name it. We're seeing commodities really deteriorate today, led in part by nickel. Now, Simon Wardell, energy researcher at Global Insight, he says it was a hedge fund liquidating long positions in oil after rumors that Saudi Arabia was going to increase production. Of course, that's on speculation of what Chinese demand will actually be. And then the price herd behavior sort of continued, and we saw it deteriorate across all commodities. And also Caterpillar, remember yesterday, Caterpillar saying slowing machinery sales in U.S. and Asia.
Yeah, that was at the top. What did they say?
They said they were slowing machinery sales in U.S. and Asia, and that's when you sort of saw copper rotate down.
Yeah, we'll talk gold.
And the Fed.
And the Fed.
Oh, you had to get that in.
That was icing on the cake.
Gold and oil sell off after those Fed minutes.
Okay, if I'm quiet, she'll mention foreign exchange here in like 32 seconds.
I won't let you leave it out.
$15 a week. That's how much a person making $40,000 a year lost to their paycheck since the payroll tax break expired in December. It's a critical $15 after rent, after gas, after food. Walmart is taking notice. So is David Strasser of Janney Montgomery Scott. He writes brilliant notes on Walmart there in English. He is most curious about Bentonville's 7 a.m. earnings announcement. This is the real deal within your research. What has been the response of their management to this payroll tax debacle?
I mean, they're trying to provide value, to bring pricing down. They know what's going to happen. There's going to be a shift. People are going to shift from beef to chicken to pasta, and they're going to capture that. I mean, if you go back to 08, 09 during that recession, Walmart got a lot of trade down. They're kind of hoping that they get some of that as well. The problem here is that core customer just runs out of money. They were running out on Thursday. Now they're going to run out on Tuesday or Wednesday.
I'm going to ask a pretend Bill George question. What is the distinction between Walmart and Target?
I mean, Target's a higher demographic. It's probably, I bet, on average, $10,000 to $15,000 higher across the board. They just expand the economy a lot more.
Bill, jump in with a question, please.
Well, you think that Target will continue going, or they'll be hit by it too, David?
I mean, they'll get hit by it. I mean, they're going to get hit. A portion of their customers are going to get hit by it. There's no doubt about it. I mean, they tend to do better on the home and on the home type stuff and the apparel. Not as it's really the food, I think, that gets the biggest hit here, because it's that customer that's spending all of their paycheck at Walmart that you see the biggest hit. The higher up the demographic, the scale you go, a little bit less.
You could argue they'll be spending a higher percentage of it there because they can't afford to go elsewhere.
And that's what happened in 08, 09. You did see a trade down to Walmart, and it's going to happen. And this time around, I think they're better prepared versus the dollar stores. I think in 08, 09, Walmart kind of got clipped by the dollar stores. They weren't prepared. They've brought portion sizes down. They're trying to go. They spent a couple of years really going after that threat as well.
So it sounds like Walmart gets disproportionately affected by these things: payroll taxes, higher gas prices, even the delayed tax refunds.
All of those things are hurting them right now. I mean, listen, we'll see what disaster means at 7 o'clock today, but there's a lot of speculation out there about what they're going to guide for the first quarter call.
Let's talk about the stock. What a run. It was just lethargic for X number of years. It surges up. I notice a real mix, a real debate within the sell side. Where are you on buy, hold, sell?
I'm a buy on it right now, and look at yesterday when people started getting nervous about whether it's commodities or the Fed, they all went to hide in Walmart.
Bill, and this is with Harvard Business School. You stand in front of a class. Is it still case study?
It sure is.
Talk one thing.
Yes.
You're doing a case study on Walmart. How do you delegate authority across a platform that large? I mean, this makes Medtronic, your Medtronic, look
like
small.
a peanut.
Like a peanut.
They got 2 million people. Of course they have to delegate.
How do you delegate within leadership
That's not hard. They've got a system. The formula is very consistent around the world. The goods change, Tom, but the formula stays the same. Deliver the best value anywhere, never let anyone underprice you. And they consistently do that wherever they are in the world. China, Mexico, United States, Canada. They're all over.
Are they going to get hit by an increase in minimum wage if Obama goes through with $9 an hour?
Sure. Yeah, they'll get hit by a lot of things.
I would think so.
But so will everyone else. I'm just saying it's a question of share of market, and I think their share will be good.
There's a benefit to the minimum wage, too, because that customer now has more disposable income.
More to spend.
Yeah, the expense side will obviously go up, but I think the flip side of that is that they're going to get a higher revenue. I have to say that of all companies out there, they're probably a net beneficiary of that because of the revenue side of the equation. Wages will go. I mean, that $9 minimum wage will bring wages up everywhere across retail, across all low-end wages, and I think it just brings more dollars into Walmart. Maybe it's what offsets some of what we're seeing.
But David, the strategy for Walmart has been pricing, cutting prices, the layaway plans, etc. But a Bloomberg Industries report actually found that Target across the board at cheaper prices than Walmart.
Did you buy that?
I mean, and more often than not, they're the same. And a lot of times, on like for like, I don't think that's, I'd love to see that report because that doesn't make sense for me for the basic branded goods. I've never seen something like that. I've never done a price study where I saw it.
I challenge you on that. I was on the Target board for 12 years. So we did pricing studies. The prices could be equal in every commodity. The consumer said Walmart was cheaper. But, when Target is getting a consumer, more of a white-collar consumer that's going upscale a bit. And I think they'll continue doing that. So they have their niche, and they've not tried to underprice Walmart ever. That's where Kmart got in trouble.
To both of you, this is an important question. Are we overstored in America? From the sell-side analyst, the academic, hands-on leadership in corporate America, are we overstored?
Absolutely, particularly
How do you do
in the
that? You get out a bulldozer,
store.
David?
Well, there was a big bulldozer yesterday, Office Max and Office Depot merging. I mean, that's as much about store closures as anything else. I mean, that's a response to this overstoring.
It's also about Walmart.
Pardon?
It's also about Walmart.
Yeah, well, it's definitely also about Walmart, no question.
Okay, let's come back. David Strasser, Bill George with us through the hour.
Overstored. I don't know about that. All right, coming up on Bloomberg Surveillance. I love stores. 50% of Americans say the U.S. housing market will improve this year, outnumbering those with a negative outlook. It's an important shift in tone. We'll talk about the new results of a Bloomberg national poll next.
Good morning, everyone. Bloomberg Surveillance. We could spend the rest of this hour on a data check. We won't do that, but here's Sarah.
I'll give you a little
to tell us what's going on.
Okay, well, it looks like stocks have fallen officially from their 5-year highs. Yesterday, they had their worst drop since back in November. It looks set to continue those declines with futures in the red, following in the footsteps of Europe as well. Futures down almost 5 points at this hour. 10-year Treasury yield comes off of that 2% level, 198 today. Existing home sales will be a big focus. The euro weakens below 132, 131.80. Tom says crushed. I say slumping. NYMEX crude, 93.80 a barrel. And you're seeing that, Alex, really extend across commodities, some pressure there as growth concerns start to weigh.
Yeah, gold
all
on
across
1570.
Right. But the spread between WTI and Brent still holding, which is interesting to note, $21. All right, so let's get to some gainers that we saw yesterday, talking about the markets and what sort of fell apart and what didn't. Now, the gainers were actually retail. We've just been talking about that. JCPenney was higher, trying to get Martha Stewart, Living Omni Media, to break its contract with Macy's. We've been talking about that lawsuit. JCPenney seeing higher prices yesterday. Target also. Does a weak Walmart mean a better Target? That playing out there in the stock price. And losers, Staples, you had seen a huge run-up over the last couple days on those rumors of a merger between Office Depot and Office Max. Now Staples giving up some of those gains once the merger was officially announced. And last up, Lennar. Across the board, you had the home builders had a pretty rough day yesterday. Tolls earnings disappointed. Light housing starts. Worries at existing home sales today coming weaker than expected.
Okay, this is a special treat. Bill George with us, David Strasser with us. Hewlett-Packard is challenged. They're going to report after the bell. We report now on the questions that need to be asked. Should Hewlett-Packard break up? And then there's Dell. Maybe Warren Buffett will come to the rescue. He'll need a 9% or 10% preferred to get that deal done. David Strasser's here on the train wreck known as JCPenney, and it goes on and on. William George is at Harvard Business School, the former CEO of Medtronic. David Strasser with Janney as we look to Walmart this morning as well. Bill, you wrote, I thought, a very important, short, focused note for the New York Times, and you said, forget it, Meg, break it up. Do you still agree?
Absolutely. It's two different businesses, neither of which is doing very well. Revenues continue to fall in both the enterprise systems business and the hardware business. Sam Palmisano, back in 2005, spun off the PC business, spun off the disk drive business where IBM was the leader, and he's gotten stronger ever since. He's put a lot of money into software. Hewlett-Packard is way behind the party in software. That's why they did the
What's holding them up here?
They haven't invested in software. It's a software game. They don't have the systems capability. So what they need to do is to have a hardware company go down and dirty on cost and have a systems company that can try over a 5-year period to compete with IBM. I think they've got a long way to go.
What I loved about your piece is you wrote about the Hewlett history, going back to 1969 when you met David Packard.
Yeah.
The Hewlett way, you call it. How did they lose that, and are they ever able to get it back?
Well, they lost sight of who they were. They went outside 4 times in a row for CEOs. Nothing wrong with Meg, but they keep going outside, and people don't know the culture. Carly tried to remake it in her image, a marketing company. Then Mark comes in and makes it a low-cost company and cuts out R&D. They cut R&D from 10% under Dave and Bill to 3% today. How are you going to compete with IBM and Apple with 3% R&D? Right. You can't do it. I can tell you. Medtronic couldn't do it. They cut their R&D.
To switch gears, you are an outlier on Dell. I love what you've written and thought about this. You think the price is too high? Is that correct?
First of all, let me say there's a big difference between Dell and Hewlett-Packard. Michael's still there.
Right.
Dave and Bill are long gone. And so the other people are like I was, are like hired hands. But Michael's still there, and he's very committed to this thing. And so I think, I'm on the opposite side. I think, if anything, the price on the high side. I think it's fully priced.
Who owns the cash? Is the cash, when you look at this David Strasser, is the cash on the balance sheet the shareholders' cash, or is that management's cash to play with down the road? They've got to have some of that cash. We all agree.
That's management's a shareholder. Largest shareholder is still Michael. And so I think you can't separate the two totally. But I think they've made a surprisingly good offer for the thing, and I'm a little surprised they came up with it.
What is the strategy here? What's going on behind the scenes of the why they want to go private?
Because they need some air cover so they can change their strategy away from commodity PCs. Look, they had a terrible quarter.
Did you need air cover? Did you need air cover at Medtronic?
No, because we continue to invest in things, and their core business model has come unraveled because they were the low-cost producer. Now that is not sufficient. That's not going to generate the business because Steve Jobs did this end run around the PC business and pulled the rug out from under it. He could never get more than 10% share of PCs. So what did he do? He got everyone to shift to tablets.
We could go nonstop into Mark Crumpton's 2 p.m. program today on this management. David Strasser, the debacle of 2012 is J.C. Penney. I'm sorry, it's original. Both of you on this. What is he doing?
I mean, he's trying to reinvent a company, which is very tough. You're dealing with cultures. You're dealing with customers that they're not as far along as he is on the change. I mean, some of the stores look better, but the customer, it's not stuff that their customer apparently
wants. Do you
wants.
know Ron Johnson?
I know him very well. He's a very good person. He used to be at Target.
Do you give him high marks on this?
He has tried to remake the stores. He maybe tried to do too much too fast. But he's not a bad person. Let's get that straight. He's very creative, one of the most creative merchants in the business. Here's the problem. Taking an old line retail brand. I used to rip on Sears all the time. They totally lost their position.
Correct.
So did J.C. Penney. You don't do it overnight. It's very hard to bring back. Target has protected that positioning fiercely. Really well.
I'm sorry, I don't mean to interrupt, but based on his argument, J.C. Penney should be considering going private today.
I mean, I think it's been harder, but the cash flows are not there. It's tough to get. That would be a tough deal to get done. It's still a big company. It's still a big market cap company, and I think I'm not sure the cash flows are there. I mean, the whole saga with Best Buy, and they had the cash flows there to do it. It's just a challenge.
Just to wrap it up, Bill, here, we're looking at 3 juggernauts, J.C. Penney, Dell, Hewlett-Packard. Which ones have core business problems, and which ones have leadership problems?
Well, clearly HP has both.
Yeah.
And I think Dell is going through a mega transition. And Penny's had leadership problems for 20 years, and I think Ron's trying to correct it all in a year and a half, and that's very hard. And so that's why I say maybe trying to do too much too fast, but he's on the right track. The place was going out of business.
30 seconds. Who's the best managed company in the country today?
IBM.
IBM's doing the best job here. David, in the retail space, who's the best managed?
I think actually the one that's unknown is Best Buy. I think the new management team at Best Buy is really strong.
Thank you. Hubert Jolie is doing a fantastic job. That's a tough one to turn around, but if anyone can do it, Hubert can do it.
But there's still a question of...
Oh, I know. Lots of questions. But I think you'll see, you watch, I think they'll find a way to work this out and not have a war. I think Dick Schultz is smart enough not to try to go to war with his own
got a
company
winner now
and destroy the village in order to save it.
Okay, very good. David Strasser, thank you so much. With Jenny Montgomery Scott.
And talking about companies, you got to look at Google today, ramping up competition with Microsoft's Windows. Now, the company has developed the first touchscreen laptops powered by its Chrome operating system. That's according to the Wall Street Journal. No word yet when the Chrome laptops will go on sale or who's working with Google to build them. Remember, Samsung is already selling laptops that use Chrome. And something else we learned? Google Glasses.
How do they look?
Those they, really? Can you see the internet and take a picture with them?
I'm tweeting Joe Weisenthal as we speak. He's in Milan this morning.
But that brings us to our Twitter question of the day. Would you buy Google Glasses?
Bill George, help me here. Do I need to walk down the street with Google Glasses on so I can get the latest tweet? Oh, my God, it's my daughter.
Never underestimate Google's innovative skills.
That's where I am. That's where I am.
They are a very tremendously innovative company. People have been criticizing them. They and Apple are the two most creative people in the business. And I think they're going to keep going on all fronts. They're innovating on about 6 different fronts right now.
Let's go to the Twitter question right now. At B Surveillance, it's a Bill George question for you. Would you buy Google's glasses? I think it's such a dumb idea. I'm probably totally wrong.
Are they prescription?
They're actual glasses. They're actual glasses. So you and I, Tom, who are probably pretty blind, could use them. And then they also have all these features.
Excuse me. Why would you ask about prescription glasses? Is there something?
I just got diagnosed.
Is there something in our future here?
Is this a
Bray exclusive?
Eyes, yes. So if you're wondering why I'm squinting.
Bray exclusive glasses to come.
I haven't decided which ones. Maybe Google. All right. We've also got some other news that's fit to print this morning. The New York Times wants to sell the Boston Globe. More on that juicy story coming up on Bloomberg Surveillance. This is Bloomberg Surveillance. I'm Sarah Eisen with some top headlines for you this morning. A tax break used by oil and gas pipeline companies will cost the U.S. government 4 times more than what was previously estimated. The exemption for master limited partnerships, MLPs, will cost about $7 billion through 2016. This according to the Joint Commission on Taxation, and the higher estimate is due to the growth of the partnerships. $218 million is how much Lance Armstrong made over the course of his professional cycling career. This according to a compilation of his earnings by Bloomberg News. Remember, Armstrong was stripped of his 7 Tour de France titles and other championships in that doping scandal, later admitting this career was, quote, one big lie, $218 million. And the rise in the payroll tax may take an even bigger bite out of consumer spending. Listen to this, some numbers here. 7 out of 10 Americans say taking home less in their paychecks will force them to cut spending, especially on big-ticket items such as cars. All of this according to a survey from the National Retail Federation.
Yeah, it's already halfway through February. I think they've adapted. December, yeah. First week of January was
I don't know. Well, it's 7 out of 10 say they're going to cut their spending power.
7 out of 10 single best charts are brilliant. We got another one for you. Alex Steele here in for Scarlet Food.
Well, talking about the payroll tax, one other thing you might have realized, over the last 2 months, gas prices have been sneaking up on us, about 14%. So here's a chart courtesy of RBC Capital Markets measuring the drag on real GDP growth due to higher gas prices. And right there you see where gas prices are right now at $3.77, and that's just shy of 0.5% of GDP growth. Interesting correlation there. I have to point out, not everybody agrees, however. Many economists say that until gas prices supersede the last high price, which would be around $3.98, people get used to it. The higher the gas prices, the more you get used to it, and the more it moves on. But an interesting chart there from RBC.
Absolutely. Sheila Dhamarajan with us as well, with, of course, Bloomberg Markets. I mean, to me, the tipping point is $3.98-ish. Is what you're saying?
Yeah, $3.98. Probably a little bit more.
We're way through that in a lot of big cities, right?
We're way through that in a lot of big cities. And this is exactly what you guys were talking about before. This is why the Walmart consumer is so strapped right now. All of these cents make a big difference to their consumer, and the company's well aware of it.
And Bill George from Harvard Business School, you look at the People's Republic of Cambridge. What is it, $6 a gallon up there?
It sure is.
You got your $1 Burma tax, right?
This is basic law of supply and demand. Come on. If you have to open up the supply, there's a very simple decision the president can make. Prove the Keystone Pipeline. Don't force the Canadians to sell the oil to China. and you bring these things back in line. By the way, U.S. producers are doing very well right now in oil production, and we have a historic opportunity to shift the balance away from OPEC, which is, for the last 40 years is strangled.
What's great about this, Alex, jump in here, is this is all about microeconomics. If price goes up,
it works.
things happen.
It works.
The problem is with gas prices now, the reason why they're so high is refiners are closing because profit margins are being eroded, not necessarily due to increased demand in gas prices. So some of it's seasonal maintenance, which is normal. You shut down, you refix your machinery. But the other part of it, a big one in New Jersey, a Port Reading refinery is shut down, and that's why you just can't produce the product.
How do you know this stuff? Which refinery?
I am a real big oil dork. It's a Port Reading refinery in New Jersey owned by Hess that has been shut down because they were losing money, basically buying expensive foreign oil like Brent, selling it for Brent-like prices, therefore no margin.
You always own the railroads in monopoly, right? You went right through the railroads in monopoly.
If I landed on it, is that a bad thing?
Sheila, help me out here. I mean, the microeconomics is this is great. Price goes up, things happen. What a shock.
Right, and one of the after effects that we've talked about a lot this morning is the impact on the consumer. But I think it's important to say that it's not just about the gas prices. Right now, the consumer really being hit with the 1, 2, 3 punch, the payroll tax hike, also the tax rebates that you're talking about. Add on top of that, this gas price rising. Consumer right now is getting crushed.
Well, but housing is better, so that's on the plus side, sort of. Bill George.
So a lot of people say it's artificially better because of what a lot of the private equity shops are doing, going in and buying a lot of those housing. So I think a lot of people are still nervous when it comes to the value of their homes.
In the next hour, we'll talk the euro. In the next hour, I promise, the euro and Italian spreads wider.
Will you do that for me?
I will do that in the next hour.
Thank you very much. But first, we have to take a look at Wyndham Worldwide. It has a new project on its hands. We're sending Tom. It's called Margaritaville. Coming up, we'll tell you about this new expansion deal with Jimmy Buffett. The Wyndham CEO joins us on Bloomberg Surveillance.
Good morning, everyone. Bloomberg Surveillance. On television this morning, market makers at 10 a.m. David Kostin on these equity markets actually holding up pretty well when you look at the other markets. This is must-watch this morning. David Kostin of Goldman Sachs. We need to get to company news right now. In for Scarlet Fu, here's Alex Steele.
We start with beer today. Anheuser-Busch, InBev, and the Justice Department are in settlement talks over InBev's buyout of Modelo. Now, the two sides have asked a federal judge to suspend the government's antitrust lawsuit so they can negotiate. And the New York Times is looking to sell the Boston Globe. The Times putting the Globe up for sale so it can focus on its flagship paper and brand. The Times had previously tried to sell the Globe in 2009. And a win for Mercedes in its battle to be the #1 in the U.S. Buyers registered more than 227,000 Mercedes vehicles in the U.S. last year. That tops the 267,000 BMWs registered. That's according to R.L. Polk. The two German automakers are battling it out for the top spot among luxury car sellers in the U.S. I don't drive, so too bad for me.
Yeah. Nobody drives.
I don't know how to drive.
Fewer Americans are driving.
You don't have a driver's license?
I don't have a driver's. This is a whole different block, but yes, no driver's license for me.
I have one, but I can't drive.
I take a surveillance helicopter. It's time for our Bloomberg Business Week 50 series. This has been a real joy through the week here, looking at top-performing companies based off risk-adjusted returns. Today we examine number 12, Wyndham Worldwide. Think about, say, St. Thomas, the Virgin Islands. One of the great eyesores there has been the Grand Beach Resort Hotel. Boarded up would be a polite description. Looked like a Bucknell beer party. Wyndham Worldwide has teamed up with Jimmy Buffett, to create a Margaritaville resort, allowing you to waste away while Stephen Holmes and company profit. It is another example of how shares move from $10 to $50. Wonderful to have you there. I put Bucknell in there because they've got a great chemistry department. I know you've been active with them as well. This is a really cool idea. It's a wasted property on St. Thomas. And how did you do this? How do you jump in and turn it, boarded up dump into something Jimmy Buffett would like?
Well, it's going to take some work to get it to a point where it's a product that we'll all be proud of. It's a project that we've been involved with for some time. We've been waiting for the right partnership to come in and be able to develop it in a successful way. So we do a lot of development with timeshare product. We use a lot of partners for our marketing efforts, whether it's Caesars or Universal Studios or Outrigger Resorts out in Hawaii. So using partners is something that we do very effectively.
Something that, Bill, I know you would be, Bill George with us from Harvard Business School, is you've got a stigma to timeshare. You've got to push every day against that legacy we have of decades and decades of timeshare gone bad. How do you do that?
Well, you're showing your age, Tom. People now don't have that same stigma.
Highlight of your day.
Because the fact is that people really enjoy the product, but they have to be told what the product is. It's not a sought good, it's a sold good. So we go out and we tell people about the product. They come in, and what we find is that people from the younger generation are even more inclined to enjoy the product and more positive about using the product.
Steve, I got a question. Oh, go ahead.
Oh, no, please, Bill, go ahead.
I got a question for you. So when I see your company, what I see are all those great brands, Wyndham and Ramada and Howard Johnson's, but the bulk of your revenues are coming from the rental properties.
The timeshare business.
The timeshare business. How do you keep that growing? Well, you've had a huge number of properties.
Yeah, growth is not an issue for timeshare. It is a product that is underpenetrated in the marketplace. Less than, I think it's around 5 or 6% of the households that can own timeshare, just from a standpoint of affordability, do own timeshare. And people who own it tend to buy more. 50% of the people who buy timeshare end up buying more points to either have a 3-bedroom instead of a 2-bedroom unit, or have a week and a half instead of a week of time. So it's a product that people enjoy and they tend to buy more of, and there's a very underpenetrated market. So growth is not the issue. Partnerships to do that is important, like the Margaritaville deal.
Now, half of your revenue and earnings do come from timeshares. What's your strategy going forward in terms of diversification of, say, lodging versus timeshare?
Well, we've had a push to create better diversification. We'd like to see the lodging group become a larger portion of our overall earnings. But as Bill suggests, it's been growing. Timeshare's been growing very rapidly. We're not going to, stop that from growing just to allow the other pieces to grow. And since it is the largest piece, it's tended to keep itself in the lead position. But we do have a lot of focus on the lodging business. We have acquired brands in the past. We will buy more brands if they're available.
How linked are you to the economy, and what have you learned about the economy in the last couple of weeks? What do you see at Wyndham Worldwide?
Well, we're very, very linked to the economy. The more on the hotel side, frankly, than any other business. The timeshare business tends to be more resilient to economic ups and downs. In fact, during the downturn, the timeshare business did very well for us, and a lot of the other big players, be it Disney, Hilton, or Marriott, all did well during the downturn. But the hotel business is subject to it. We haven't seen really any big impact over the last few weeks or months. It's been pretty much as we expected to see. Now, bear in mind, we're at a very central point of the economy, because we are a mid-market player, mid-market player. So we don't tend to move as much as maybe an upper end might, up or down, when there's move in business travel. We tend to be more of the economy play, leisure,
I got one last question quickly here. If you were to lecture Bill George's class, you've got the most interesting track record, Sendon, HFS, out of Bucknell. What would you say to Harvard Business School students right now?
Follow your passion.
Hey, a man after my... I have a quick question for you, though. Yeah. What stands out to me about your company is not all the things we've been talking about. It's the way you motivate and inspire your employees. Your company has a fantastic track record, appears, for women, executive women, for gays, for everyone.
Thank you.
And so tell me about that. Tell us why that, because when I come to your properties, I'm not going to see you.
No,
and I probably won't see your senior execs.
No, well, in my opinion, culture is critically important to the success of a company. You can't have a company just built on some widgets or some asset out in the field. You have to have a culture that survives. Right. And actually, a colleague of you, Michael Beers, up at Harvard, runs a program, Leadership with Higher Ambition.
Right.
And it's all about, do you do the things that are right for the business, as opposed to just doing things that are right for $1 for a quarter.
We're going to go on. You two can walk over there 45 feet here at World Headquarters and keep this conversation going. Stephen Holmes, thank you so much with Wyndham. Bill George, this has been wonderful.
Great. Thanks, Tom.
Let's do it again soon. So much